Accounting the right way. There are three important terms that you need to learn before you start going into accounting. These terms are assets, liabilities, and liquidity. Assets are anything tangible or intangible and are capable of being owned or controlled to produce value. Liabilities is the amount we own of the business, and equity is how much we actually own of this business. Along with these three terms, you need to know what is GAAPs. GAAPs are specific rules, practices, and procedures that all accountants follow. Some GAAPs are formal regulations, and some are common practices. Today we'll be looking at business entity concept. The business entity concept GAAP. This GAAP provides that the accounting for a business organization must be kept separate from the personal affairs of its owner, or from any other business or organization. Example, business accounts and your family accounts must be kept separate. One of the first things you see is a journal. A journal keeps record of your transactions over a period of time. You always start with the year in the first transaction and, of course, the date. Then the debit will be put first, along with the credited, which is indented. Usually there is a note underneath. However, this is not a real situation. Therefore, there is no note of the transaction. The net profit and income statement. Net profit is the difference between revenues and expenses. Revenues are related to the sale of a good or service. Revenues are also sometimes called sales revenues, fees earned, and turnover. Turnover is used in the UK. Expenses are the cost related to revenues. Example, rent, advertising, wages, salaries, fuel, and utilities. While the income statement is a financial statement that summarizes the items of revenue and expense. As you can see here, this is an income statement. You have your revenue, your expense, and your net income, which is, I repeat, the difference between revenues and expenses. Now, what is this? This title probably might have given it away already. It is the trial balance. The trial balance is set up in the form of fundamental accounting equation. A equals to L plus OE, or assets equals to liabilities plus owner's equity. This trial balance is set up so that we can see that the debit accounts equal to the credit accounts. So after that short lesson, we have an application of what we have learned today. So these are the transactions, and now we want to make a journal. As you can see, I have already started. However, I am not finished. For I still have the 24th to do. So let's do the 24th together. You don't have to put the months after the first transaction, but I'm putting it here to let you see the difference. So, we should go back to the transaction. It says Mr. Lee fixed AU's BMW for $2,000 cash, but did not deposit in the company's bank account. Therefore, this is accounted as a drawing. And therefore, the account debited is the drawings. And the account credited is the revenues. $2,000. $2,000. So now we want to make a financial statement of this information that has been provided. The type of financial statement I've chosen is an income statement because you have the revenue and the many expenses that Mr. Lee's garage used. So we count 1, 2, 3, 4, 5, 6, 10, 12. So we want 14 lines, 15 lines, because we will need lines for other. We only want 2 columns. You want only 15 lines because we will need to add more stuff in. So count. And the revenue. So we'll move this into the here. And the rest, you can just move it bottom. You can just move it into this graph. And delivery expense is the last one. And then this is the final total. Therefore, we must underline it. This is also, if we add all these, equals to 13,347. You want it on the left hand side. Total expense. You also want to put a line underneath each part. Last of all is the net income. And that is 30,000 minus 13,347, which is 16,600. 53. And we also underline this. There should be a double on. That's it. Now going on. What is wrong with this journal? As you can see, there are a lot of significant errors. First, the credit always comes behind the debit. The credit is always indented. There is no month. Or proper year. Not only that, there's no date here. Let's say the 7th. And that's it. That's wrong with this journal. Let's type the first transaction. May 3rd, 2011. May 3rd. Date. And you have to add one more line. Debit. And credit. So, we first put drawings. Then we put bank. Then we debit the drawings for $5,000 and credit the bank for $5,000. Then he only wanted to withdraw $500. Sammy has to put $500 back in the bank. And let's pretend the date he put it back was the 4th. So he credited the drawings with $4,500. Credits he debit bank $4,500. And there you have it. Your answer. Okay, last of all, the chance question. Choosing between two. The next slide shows two companies. Assume that each of the two companies have been forced out of business and must sell its assets for cash in order to pay its debts. So here are the two companies: Gavin's Cantonese School and Jody's Saloon. As you can see here, Gavin must be able to sell all this to repay his liabilities, and if he does that, he will be fine. Jody must also sell all this at the original price when she bought it to be able to repay all her accounts payable, mortgage, and everything else. Thanks for watching.